Good evening. Technology is wonderful when it works. My name is Jeff Buckman. I'm the college counselor here. How many of you came to my previous presentation? Just curious. Cool. Okay. And how many are on here on behalf of your senior, junior, sophomore, freshman? Nice. Good. Okay. It's never too early to start this process. Never, ever, ever. So we're going to talk money. I don't have a magic money tree behind me. I'm going to bring out the end. You guys just keep grabbing money. But we're going to talk about how to qualify for kinds of aid, scholarships, grants, loans, etc. The process, when to do it, how to do it, what's required, what to do early if you're looking at a freshman or sophomore compared to what you would do as a junior or senior parent, and just kind of all of the above. How many currently have a student in college? Right. So this year's new for you guys in terms of the timeline, okay? It used to be with financial aid, you would file the FAFSA, your financial aid form, January 1 of the senior year using that tax data. So for a 2017 grad, it would have been 2016 tax data, typically in the past. Not this year. It's changing, okay? We'll talk about what data you're going to use and actually how it should be easier for you in terms of submitting it and getting the answers quicker from the colleges in terms of the final cost. Okay, so the government, federal government changed the deadline, and now you can file your FAFSA as of October 1st for seniors. Okay, so we'll go through that. So financial aid, what is it? How do I get it, and how do I apply for it? Those are the three main things we will talk about tonight, all right? It's not that bad. It really isn't, especially if you're doing the new process, okay? So here's how financial aid works in a nutshell. The COA, cost of attendance per school. That's tuition, housing, expenses, books. They package you using their cost of attendance. Then they will subtract your EFC, the estimated family contribution. That number the government thinks you guys can pay for education that first year. Then that equals how much you need. Their cost minus your contribution, which is student and parent accounts, equals how much you need to pay. Right? And I will tell you right now, especially for those who've already filed a FAFSA with someone in college, that EFC is always higher than you think. Okay? You're going to be shocked when you're like, I don't have that money. Well, they think you do, they being the government. Okay? So we'll see how it's going to play out in terms of aid packages. But that's in a nutshell what they're trying to figure out. Total cost, which differs per school. The EFC is the same per school. That's based on the financial information. And then the need changes per school. Okay? So you always have to look at the bottom dollar amount of what are they giving me in terms of aid related to that COA. Okay? So there's different kinds of aid. Scholarships is the first one. That's money typically based on a combination of ACT and GPA. And that's either from the institution, meaning the college, or an outside source. Perhaps it's an outside corporation or company or whoever that has money based on their criteria. Those are scholarships. Those are free. You don't pay them back. Okay? The ones from the institution, primarily when you submit your application for admission, if you qualify, here's your money. Right? And a lot of them will post the criteria online on the college website. Here's what it takes to qualify in the different amounts. So a 3.5 and a 26 equals 4,000. A 3.7 and a 29 equals 8,000. Whatever it is, it stair steps up. So a lot post out there. Some don't, more on the private side because they're more holistic in their approach in admitting and giving money. But it's a question always to ask when you visit. What does it take to qualify? Specifically GPA and test score. And it's the GPA most likely at the end of junior year. Some will take that first semester senior year. Very few take the end of senior year GPA. But for most of them, it's going to be the end of that junior year because most applications are due in December and there's no grades yet. Okay? Now, the test score typically goes all the way through and including that December ACT for seniors. So they could apply now and retake an ACT and resubmit the ACT. And we're talking the non-super selective schools here, okay? So the other vast majority. You can submit your test score after the application date as long as you meet the priority deadline date for scholarship. And if that new number bumps you up in money, they automatically do that for you, okay? So pay attention per school what that criteria might be. So it might behoove a student to retake it one more time as a senior to gain one more point to gain an extra $2,000 times 4. Make sense? Right? So that's where you have to be cognizant of the criteria if they do tell you or post that. Right? It could be very beneficial. Bright Flight, which is a state of Missouri program, currently is the top 3% of scores in the state, which is a 31. And you have until the June after you graduate high school ACT to get that. Right? That's any time getting a 31. So if you're sitting at a 29-30, yes, retake it to get well, it's based on the budget of the governor, but last year was $3,000 a year times 4. Okay? And that's stackable on top of anything else. But that's only good in the state of Missouri. You can't take that across state lines. Right? So those are scholarships. And we'll talk about more later on how to apply for all the outside ones that, again, you stack up and take with you to whatever school you go to. Okay? Work study is the job on campus. So any job, scanning the rec center, filing books at the library, if they still have books in the library these days, right? Now that is dependent on the EFC. So you have to qualify for work study. So the EFC, think of it this way. The lower the EFC, which means the lower the income of the family, the more the need-based monies you're going to qualify for. And work study is a need-based type of aid. And so that is the level of the need that you would have versus how the school is going to fund you. So every school, college gets a certain amount of money from the government to fund work study students. That's kind of how it works, right? And you're capped at 20 hours a week, which is a lot for a college student anyway, right? 20 hours a week, a job on campus somewhere, not exceeding that award level. So let's say you get $3,000 in work study. Once you hit $3,000, you're done working. Unless that particular office you're working in has money out of their own budget to keep funding you, which that does happen, okay? But once you hit that max amount based on your award, you're changing who's funding you at work. Was federal government, now might be the institution. If that makes sense, okay? Now, work study is a job on campus. So if a student does not qualify for work study, go get a job on campus. It's the same job. The only difference is work study is a guaranteed job. You're still applying for it, but you're guaranteed a job on campus. Whereas any other job, you have to apply and get it. It's the same hours and same pay. The only difference is where's that money coming from, what pot? It's the only difference. So if the student is not being packaged with work study, not a big deal. If they want a job on campus, go get a job on campus. And in my opinion, I would get a job on campus versus off campus. Off campus, you might make more as a server at a restaurant or what have you. But when you're on campus and you have a big project, it's okay to say, I can't work today. They understand that. When you want to go home for Thanksgiving and Christmas and spring break, school's closed. You can do that. Applebee's may say, hey, I need you to wait tables. You know, I can make more, but a lot less flexible. So I would say on campus is nice, okay? And 20 hours is a lot. You know, if you need that to pay for college, I get that. But that's a lot to do along with going to school as well, okay? So that's work study. Grants, those are free. Don't pay them back. But again, you have to qualify based on the EFC. So there's federal grants and state grants. When you file your FAFSA, it opens both coffers. You just file it, and if you qualify, here's your money, okay? So Pell Grants is the biggest. That's a federal money, okay? But it's capped. You can't get 20,000 in Pell. You know, you're only going to get several thousand, and then that's it. SEOG, Supplemental Educational Opportunity Grant, federal grant. Access Missouri is a Missouri grant. So if you apply to Mizzou and KU and you qualify for Access Missouri, you're not going to qualify for that in Kansas. You don't pay taxes there, right? And can't take money across state lines, and can't qualify for Kansas need-based fund because you don't live in Kansas. So that will differ if you qualify for those things, okay? And then Bright Flight is a grant based on academics, not need, okay? It's called Bright Flight as a reason to keep the high-achieving students in the state. That's the reason they do that, okay? So again, you file your FAFSA. If you qualify, these amounts show up. Now, when you apply for admission, you might find shortly thereafter if you qualify for an academic scholarship. A lot of times they notify you, hey, congrats, you won this, or you qualify for this, you know. That's standard after you apply for admission. But all the other stuff shows up on your student aid reports, which is going to be showing up probably, we're guessing, it's a new process, we're thinking December at the earliest, depending on when you file your FAFSA, but most likely January, maybe February, somewhere in there. So those 3 months, okay? So that's the different types of aid in terms of what's on the FAFSA. Sort of. Read that. Pretty true, right? So what have we not talked about? Loans, okay? Loans, the dreaded L word, loans. So here's how loans work. Those are federal loans that have a max capacity. $5,500 as a freshman, $6,500 as a sophomore, and $7,500 both as junior and senior. That's the max federal student loan that students can get. Okay, now you're going to see two numbers in that freshman category, $3,500 and $2,000. There's two different kinds of loans, subsidized and unsubsidized, based on what? That EFC. Everything goes right back to the EFC. A subsidized loan means that money that you're getting is interest-free for the time that you stay in school. Then once you graduate, 6 months after, repayment kicks in, beginning with the interest. So it's free money, if you want to call it that, for those 4 years you're in college. Now, of the $5,500, only $3,500 can be subsidized. The other $2,000 is unsub. And with an unsub loan, you can let the interest accrue all 4 years or paid off monthly. It's up to you. If you can afford monthly payments just on the interest, I would do that. Okay? And again, these are student loans. So student, in your name, you're going to sign a promissory note, meaning, yes, I promise to pay this back. Mom and dad, grandma, grandpa, aunts and uncles, somebody has to co-sign on a federal loan, meaning if my student defaults on a loan, I have to pay it back. Okay? Students, if you ever have a loan of any type in your name, car loan, house loan, student loan, the two loans never to default on are your student loan and your house loan. Ever. Okay? So then you can see the max undergrad federal student loan is $31,000. That's it. Okay? Students can't go take another federal loan on top of that. That's the max. For a reason, too. You don't need to have this absurd high amount of debt. Okay? I want to limit that. All right? So the nice thing is if you get a loan, regardless, unsub or sub, payments are deferred until 6 months after you graduate or stop attending full time. Okay? And then it kicks in. And then those loans, which we'll go through in a minute, you pay back on monthly for 10 years. Okay? All right, so that's a student loan. Whoops. So I hit the wrong button there. Why am I going backwards? Let's talk about the parent loan. Yes, parents, you can take out loans too. Now, here's the difference. So the Parent Plus loan, you're the owner. Mom and dad are the owner. Okay? It requires a credit check to get this. So if credit is not as high to be approved, that loan can then turn into one of those federal loans for students on top of the $5,500. So students can get more loans in their names if mom and dad don't have the credit to get a Parent Plus loan. Okay? All right? I don't know if I would suggest that, but you can. Okay? The max amount of the Parent Plus loan is that cost of attendance minus the other aid, including the student loan. Okay? Or I should say this. The student doesn't need to take out a loan. You could do the Parent Plus loan all if you wanted to, but I wouldn't. And I'll tell you why in a minute. All right? So you can take out the rest in a Parent Plus loan, and then that payment can be deferred until after graduation with the interest accruing. Does that make sense? So same kind of repayment as a student. Okay? I'm going backwards. Now, let's talk about the interest rates. So you can see the interest rates and why I would not suggest a Parent Plus loan. It's almost double the student. So this is a current school year, not next school year. And actually interest rates went down. This is the current school year we're in for 16-17. So a subsidized or unsub is 3.76, okay? And that number is going to fluctuate. So you take out a loan now, freshmen, that number of 3.76, when you graduate 4 years later, could be higher or lower. Does that make sense? Okay, and it's got a cap. It's got a threshold that you can't go above in terms of interest rate. It's pretty high, right? But that's where the interest rates lie. So if a Parent Plus loan, you can see it's double. So there might be other strategies, home equity loan, private bank loan, instead of a Parent Plus loan that might have a better interest rate. Okay? So think about that when you are looking to pay for college. All these different avenues combine to hopefully make that cost of attendance. Okay? So those are loans. Now let's talk about the FAFSA, the Free Application for Federal Student Aid. This is a federal form, FAFSA.gov. You go there to file this form. Every single year, the student is going to college. So 4 times, you're going to file this form between October and December of that next year. Okay? Now, with this class, the senior class, again, FAFSA deadlines have changed. So October 1 to December 1 is the priority filing window. The good news is you can use 2015 tax data. It's called prior or prior year FAFSA. Okay? So it used to be seniors would file this in January of 17 using 2016 data. Now we're going back one more year and using 2015 tax data. Question up top.
Is that per child?
That is per child. Because every child has their own social number and bank accounts. So parental income and assets and all will be the same per kid. It's a kid info that changes. So yes, every child, if they want aid, does a FAFSA. Okay? Yes? Congratulations.
Yeah, I'm very excited about the whole process. How is that going to look on the FAFSA?
Okay, so
No different than if I would file for children of different ages?
right. Okay, so the thing is the EFC. So whether you have 2 kids the same age or 2 kids different age in college at the same time, they're taking the EFC that you would normally have with 1 child in college and cutting it in half because now you have 2 at the same time. So theoretically, it should help you qualify for more aid, assuming the other stuff, income, assets, are in line with that. So yes, it does help having more than one child in college at the same time. In life, maybe not. But for college purposes, yes. Yeah, so good luck. Okay. All right, so what you're going to do then in the FAFSA is there's a data import tool, a button, that you then link to your IRS tax return that you just did in April. So you literally hit a button and it imports all those numbers from the tax return into the parental part of the FAFSA. There's a student part too that you can do the same thing if they file a tax return. Okay. So then all you're doing is filling in, as of today, what's in your checking account, as of today, what's in your savings account, and other up-to-date numbers. Does that make sense? So this speeds up the process tremendously because you hit a button and boom, there it is. Okay? Question?
You said that was a priority filing.
Right.
What am I getting by taking the priority filing?
You win a new car. No, the way it works is this. So if you file your FAFSA between those dates, and here's the key, and you would qualify for some of those amounts, need-based or otherwise, it's your money first. If you file it after December 1st, and those who filed it before have sucked up all the Pell money, or work study, or whatever, it's gone for you. Okay? So the advantage now is I'm just importing my tax return. I shouldn't have anything that I'm waiting on. I mean, if you own a business, maybe, but you can always estimate numbers. So you estimate with the FAFSA if you don't have everything done, submit it, get the numbers done, log back in, update it, resubmit it. But don't wait until every number is final. If you have to estimate, that's okay. Understanding if they give you an aid package based on estimated numbers, that could then change once they have the final numbers, good or bad. Make sense? So it's okay to estimate if you need to get it in by December 1, but then you got to change that information, which then could change the package, better or worse. Okay? So that is the FAFSA. Here's what it looks like when you go to FAFSA.gov. So you are going to, for seniors this year, start a new FAFSA. For those who already have a student in college, you click on the right one, returning user, and you log in to your FAFSA from last year. Okay? You're going to see at the very top that lock FSA ID at the top. You see it? Home, About Us, FSA ID. You have to create a 4-digit PIN for you and the student, which you can do now. Create the PIN. This is how you log in future years. So remember the PIN. Okay? So once you create that PIN, which is kind of how you electronically sign your form, then you can go off and start that FAFSA. And you can start it and come back and finish. I mean, so not all at one time if you want to, you know. So you can begin the process now. Question up top. Correct. So the parent PIN is good per child. For 1 kid or 8 kids, same parent PIN. Okay? The student PIN will differ. Again, because each student's going to have their own FAFSA, right? Okay. So that's what it looks like. So you know you're going to the right site. Now let's go over some common questions. Question 1, how can I get my child to be independent of me? You can't. Honestly, you can't. Unless they're 24, which I don't think anybody here is as a senior, married, last time I checked nobody is, or have a kid of their own dependents. I don't know if I would suggest that route. Or both parents are deceased. That's the only way to be independent. Okay? So bottom line is, they can't. You can't say, oh, they're 18, I want to kick them out of the house. Great. They're still under you. It just doesn't work that way. Okay? Now, if you would meet that criteria somehow, that means you're independent, which means you're going to get all the free money. Okay? But most here are not in that situation. If parents are divorced, who files the FAFSA? Well, who do they live with half-time or more? That's the key. It's who they physically live with, half-time or more. And that is the household that files a FAFSA. So in that household, Johnny lives with mom, truly more than half-time, and mom is remarried. It's mom and stepdad's info in the FAFSA, and not the biological dad. It's the household the kid lives with. Even if that includes more kids from the other parent, and how many kids are in a household, and who are the parents in that household, and that's who submits it. Okay? So, if parents are divorced, and it truly is 50-50, I mean truly is 50-50, here's what I would do. Have the child live with the parent who makes less money for one more day. Truly. Okay? And assets and all that. So it's hard to predict if it's like, oh, we make the same amount and da-da-da. Okay, well, I'll show you in a minute maybe how to calculate something. But if there's a big discrepancy, then yes, maybe live for the purpose of qualifying. Now, if that opens up a whole other can of worms with butting heads with that parent, then let's not go there. But for finances, it's going to make sense to live with the parent making less money, because that's who's on the FAFSA. Okay? Then, what if I have a 529 plan, a college savings account? Whose asset is it? It's the parent's asset, not the child's. So it shows up under your part of the FAFSA. If grandparents have a 529, way to go, grandma. But don't use it yet. Because it's not, any non-parental 529 is not reported on the FAFSA until funds have been dispersed from that account, meaning Granny then used money from the 529 and sent it to the college to help pay for college, which then shows up as income the next year for the kid, which then shows up on the FAFSA. So what you do is if you can, you defer outside 529s until the senior year after you file the FAFSA, because then it's never shown on that. Does that make sense? I feel like a politician, some loopholes here. So this is how it works. All right? This is how it works. So parental assets, and there's no rule that says you have to use that. All right? I'm going to save it for grad school. That's fine. But it's still showing up as an asset on the FAFSA, and they're expecting a percentage of that to go towards education that first year. Whether you do it or not, it's up to you guys. But if you have 10 grand sitting in a 529, a certain percentage of that is expected to go toward education, which is going to hurt that EFC. Now you could say, okay, I'll deplete that as fast as I can, maybe that first year, and use it for expenses, books, laptop, whatever, and now it's not going to show up on years 2, 3, and 4, but I can't guarantee it's going to affect the EFC because there's other stuff affecting that. Does it make sense? So yeah, I might deplete that money, but if I got a whole lot of income or assets otherwise, spending it all is not going to have any effect. So, question. Sure, good question. What assets are not included? Anything that is designated in retirement. 403Bs, 401Ks, anything in a retirement account is not looked at as an asset. Okay? Everything else is investments, businesses you own, you have to assign a value to that business, et cetera, et cetera. No. No, they don't look at the family home. Not on the FAFSA. Okay? Not on the FAFSA. They don't look at any debts, car payments, house payments, et cetera. No. But thank you for bringing that up. Question?
Back to kind of your divorce situation.
Right.
What if the one parent that is filing the FAFSA does not have 529? The other parent does not filing does.
So the child lives half-time or more in the family that does not have a 529. Correct? Then it's not reported. Okay? Now, there's another document called the CSS profile. That is if you're applying to Stanford, WashU, Duke, Yale, Harvard, Princeton. That does look at debt, meaning house payments, car payments. So I pay for a private school tuition, other things. It's pretty invasive. Okay? And colleges use that to give even more aid or less aid to use a family. So if you're applying to a very highly selective school, chances are you're going to do the FAFSA and the CSS profile. Okay? Which is just more numbers to put in. Okay? But the vast majority are just in the FAFSA. Can I link to the tax return? Yes, we talked about that. The data retrieval tool. Hit the button, off you go. Okay? Very simple to do. Very simple to do. Can I use 2016 tax data? No. With 2 asterisks. Unless there's something that has significantly changed. Loss of job, death in the family, what they call an extenuating circumstance. Financial aid offices have this term called professional judgment. So they can change things in the FAFSA if you qualify. You have to submit the FAFSA first, and then you say, okay, here's the issue. You fill out the form, and they can go back and adjust the package. Okay? But it's got to be something significant. Not, I made 10 grand less. That's not, you can't do that. But like I significantly made less, and the income I had in 2015 was a rarity, and I had a big bonus that year, whatever it is, I don't know. But the vast majority are just using 2015 tax data, not 2016. Question up top.
So if you do go ahead and file the FAFSA, would you initially study your 2016 tax returns?
No, 2016 is going to be for sophomore year. Yeah, so that's the advantage is it's already done. But if something would significantly happen that would fluctuate those numbers to the betterment of the child, you can always ask the financial aid office. Say, hey, this happened in 2016. Can I do something to affect the FAFSA? And they can say yes or no. Okay? Whoops. And then after you file your FAFSA, then what? Well, then you're going to get a student aid report per school. So each college will then send you their aid report, typically in that portal that you use to apply online. So parents, make sure you check with the kid to say, hey, did you log into Missouri State's portal to see your aid package? Because they may not have. And it's sitting there, okay? And so then you have to look at each aid report and respond per school what you want. Yes, I want that scholarship. Yes, I want that loan. Oh, yes, I want that loan, but only $2,000 and not $5,500. You can do that all through that portal. But you have to respond per school with the aid they're giving you and what you want. Okay? Does not mean you're committing yet to the school. It just says, yes, I want that money. All right? Which that has to be done by May 1st. So you might get your aid package in January, but have to respond with all the numbers by May 1. That's all. Okay? All right, so let's look at some tools. So if you're curious, what is my EFC or how much can I get per school, there's 2 things you can use. One is called a net price calculator. Every school, by law, has to have this on their website. Just go to the top search bar and type in net price calculator. It brings you to the thing on the right. You put in some preliminary numbers, and it says, okay, here's what we're estimating your aid to be. So here's our COA, $20,168, and minus your total aid. And then here is what we think the net price is going to be. And so you can see, is this in the ballpark or not for the family? Right? And then you can play with the numbers too, should you be able to do that, and say, okay, well, if I have this, if I take out that amount of assets, how does it change my net price? And you can do those things too. All right? Or there's a FAFSA forecaster that kind of does the same thing. But that's not based on the COA because that differs per school, right? So the net price is going to be school specific. The FAFSA forecaster just gives you your EFC overall. But you have no idea how that plays into that school, right? Because an EFC of 10 grand doesn't go very far at Missouri State that costs 16, but it sure goes far at WashU that costs 60, right? So that's why I use that net price calculator to see what you might be getting roughly from the school, okay? Now what it doesn't tell you is when it has estimated total grant aid, Is that free money based on EFC? Is that I got a scholarship? They don't always tell you that stuff. They just lump it into this number. But it gives you a good ballpark of what to expect. Okay? Now, let's go through some sample aid packages. So seniors, you're going to be looking at this in about 2 months. Literally. Okay? So we have different amounts. UMSL, Missouri State, SLU, different cost. And let's look at now what I don't have here is the same EFC per situation. I just email my friends at these schools saying, hey, give me a sample aid package and what yours looks like. So that's not apples to apples. But it gives you an idea of kind of what's going to look like and what's on it. All right? So the first one is UMSL. Let's look at theirs. Maybe. Well, that's not good. It's playing my slide. That's weird. Bear with me. That's not what I want. Let's do it the old-fashioned way. Told you technology is not good. Where'd my signal go? Well, lovely, because I can see it here, but I can't see it there. What in the world? Bear with me. We on? All right. So if we looked at UMSL's aid award letter, here's what it's going to look like. There we go. All right. So you can see they're going to break it down per semester. So you get a scholarship, again, test scores and grades, worth total $2,500. Then we're going to give you, it looks like a scholarship of $4,000 to live on campus. It looks like a housing type of scholarship. Then there's the loan, the federal loan. It used to be called the Stafford loan. Now it's called just a federal loan. There's your $5,500. So total aid in this case is $12,000. And what was their cost? $20,000. Right? Bless you. So out-of-pocket expenses are $8,000. Correct? Wrong. Why? Loans. Exactly. It's going to look like out-of-pocket's $8,000. It's $8,000 plus $5,500 in the kid's name. So really out-of-pocket's $13,500. So you have to know what you're looking at here, right? They're going to sell it as, hey, you got some money, but how much of that's loans and I got to pay back anyway with interest, right? So that's what the aid package looks like from UMSL, okay? And then if you read the paragraphs, it says, hey, log into your account to accept your aid notices, blah, 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 you know, tells you what to do. So that's UMSL's package. Let's look at Missouri State's package. Scroll down. All right. So I got the provost, $2,500. I got Pell Grant. That's about max Pell. I got Pell Grant. I got my 2 loans, partly sub, partly unsub, but totaling $5,500. I got Access Missouri grant of $1,500. I got the SOG grant of $4,000. So total package is $16,000. That's about everything, okay? So if you want to call that your full ride, you can call that a full ride. Sort of. Why? We still got loans, right? So it's not, I can go there and not have to give anything out of pocket the first 4 years. But then those loans kick in at 4.5. So I got my $5,500 times 4. So yeah, it's free, sort of, the first 4 years, but then I owe $30,000, right? Now, it could be a great way to fund an education and get a college degree. I'm not disputing that whatsoever. But we'll look in a minute of how loans are going to play out in the kid's future, okay? So that is Missouri State. Yes. Right, because they're a state school and cost different amounts. No. This is, good question. This is just the first year, because remember, you're filing your FAFSA every single year. So what could change here is maybe in year 1, I qualify for Pell, but year 2, I don't. Because that's, again, based on income and assets, right? So this is not a guaranteed package all 4 years. But 9 times out of 10, if you qualify for Pell in year 1, you're going to qualify in 2, 3, and 4, unless something happens significantly, right, with income that goes up. Yes?
So based upon that scenario, what if you did not use your 529 elder, and then at the end when it's time to pay off those loans?
Yep. Can I defer 529 and pay my loan on the back end? I believe the answer is yes, but now here's something to consider. That would work for the 3,500 sub loan. But now you're deferring your 529 and paying interest for 4 years. Does that make sense? So maybe you defer, maybe you don't use your 529 on that 3,500, but use it on that 2,000, so you're not taking out an unsub loan, and then let that money make even more money in those 4 years, and then pay off when that loan kicks in. That would make sense. Question?
If it's a loan, it will say loan.
Yes, ma'am. If it says loan, it's going to have federal direct student loan.
I don't know what all those other things are.
Right. That's half the battle. Right. And that's when you come to me and you say, hey, decipher this. Break out the Morse code. What am I looking at? Right? Because I know all those things. But it will say loan. Okay? It will definitely say loan. Now, you talk about confusing. Let's go look at SLU. Oh yeah, there's all kinds of numbers here. All right, again, broken down by semester. Okay, so 16 grand in the Dean Tuition Scholarship. That's a 28 ACT and about a 3.7 roughly. Okay, so you get 16 grand. Then something called Enhanced Merit Scholarship. Who knows what that means? Maybe you visit a campus and they give everyone who visited a campus 2 grand. Maybe it's because you were close to getting the next level. I don't know. But who cares? They gave it to you, right? It's free. Okay? Then SLU grant. That's SLU's money based on your EFC out of their pocket that you're not paying back. That's free. Okay? So you demonstrated need and they gave you $5,800. There's the Pell Grant. In this case, $3,700. There's Access Missouri Grant, $1,800. And then that private scholarship must have meant you won one and sent it to SLU, and they just add it to your account. Okay? So total scholarships and grants, free money, is just shy of $30,000. That's a lot of money. But guess what? SLU costs a lot of money, right? So now we go to loans. There's your $5,500 broken up into sub and unsub. Then we have work study of $2,500. So total aid that you got with everything was $37,875. And now we can see how it plays into some things. So total cost is $49,586. That total estimated cost. Minus your scholarship and financial aid amount, which is not including work study, okay, of $35. Oh, I'm sorry, it is. It must not be including loans. They took off something there. Okay? And then you have a balance of 14. Okay? So you would owe 14 to go to SLU, theoretically. I'm trying to figure out where the numbers come from. So they took out the scholarship plus the work study, right? But didn't include the loan in terms of your aid award. Okay? So of the 14,100 that you would have left to pay, you can take out $5,500 in a student loan, which means you roughly have $9,000 left-ish still to pay. Now, here's the thing. If you have $9,000 left to pay and you qualified for Pell, an SEOG, or whatever, or Access Missouri grant, you don't have $9,000. Does that make sense? If you're showing that high a need, that you is the neediest of needy families, and I qualify for Pell, and I still have a gap of $9,000, parents aren't going to have that $9,000 to pay for. Does it make sense? So there's a big gap there. Even though it looks less, there's still a big gap for the family. It's the loan plus the $9,000 coming from someone else. And that family is not going to have that $9,000 if they're in the Pell category. Right? So what colleges are going to tell you is when you have a conversation with them and it comes time, like SLU's admission officers, counselors, are going to call you, student, if you applied to SLU and walk you through their aid package. Okay? They're going to counsel you on that. That's cool. But then they're going to say, here's the value of SLU and why I think it's worth that $9,000. Right? So now they turn into the sales, right? Now, I used to work at SLU. We would never, ever, ever suggest that this student comes here. It just does not make any financial sense. We can't not stop them. They're not going to stop a student from going there. But they would counsel them in this situation and say, hey, here's what this means. I'll walk you through it. But realistically, you have your loan and still $9,000 to pay for. Let's talk about how that might happen. And if that can't happen, let's not go get a Parent Plus loan, which means that the income is low, and now throw debt on top of that. That's not smart. So SLU would not advise you to do that. Other colleges, I can't say yes or no. But be smart when it comes time to looking at the numbers and listening to them. And look at the bottom dollar amount, what it's truly going to affect us financially that first year before you hop in. Okay? Because I believe the next set of slides we talk about so here's the cost and how it's gone up dramatically since 75, 76. So you can see it's never coming back down, right? And it's steadily increasing. And the increase has been bigger on the private side than the state side. The gap just gets bigger and bigger that way, okay? So you can see what it used to cost total to go there and now what it does cost. And it's almost doubled, right? In some cases, more than doubled. So if you have even younger children, like I have an 8-year-old at home and an 18-month at home, I don't want to know what college is going to be like in 15 years, So just think about those things. It's not getting any cheaper year to year to year. In terms of loan, let's break it down. You take out $30,000 in loans. There's your payment. Per month, the yellow box for 10 years. Okay? So you can see if interest rate goes down or up, depending on when I repay, that's how it affects things. So student has to think about how much of my income at age 21, 22 do I want to dedicate to student loans. Because if I take out max loans, I'm kicking in $221 a month for 10 years. Okay? So what is that starting salary in comparison to that loan? Never take out more loans than your starting salary. You can't afford that. Okay? And think about how much I'm going to dedicate out of my paycheck, which is very hard for a teenager to understand. I get that, but you do, right? You know your paycheck and how FICA affects that, and taxes and Social Security, and how it quickly just drops, right? Now we got to put on loans. So if you want, as a student, to live not in parents' basement, right? Or have new car, or afford internet and gas and food and blah, 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 how much do you want to pay? Now, it is absolutely worth it to get a college degree. I'm not disputing that. But there's a limit to how much debt you should put yourself in to get that degree. And there could be smarter ways to attain the degree. A different school is cheaper, using A+ and then transferring. There's ways to get there. It doesn't matter how you get there, just get there, right? So thinking about those things in those terms. And how much do I want to be forking over? I mean, you could always pay off early, but it's due in 10 years, right? And if you're a teacher and your starting salary in Rockwood starts at 38 and it goes up, but, it's not, I'm getting huge amounts of raises, how much debt do I want? Things to think about, okay? Now, outside scholarships, here is where to go. And you'll notice I've got the best place that's the biggest, Google, okay? But there's different search engine websites that are designated to just scholarships. There's not one big master database. It just doesn't happen. But these are the big ones that are out there. And at the bottom, I'll have local ones in January for seniors, Chamber of Commerce, Elks Lodge, whoever, that you can apply for, that just seniors, okay? Come out in January, they're due in February, and you find out if you won them, Senior Awards Night here in May. It's a surprise, okay? In my opinion, the best site to look at is Google. And the key is this, putting in words about the student, and let me clarify this, the student puts in the words, not mom, right? The students do the search. Put in the keywords of how I would stand out in the process. Who's going to give me money for what reason? And go find those. Don't apply for, oh, you're female? Okay. That's, 150 million of us, right? But how am I going to be different? Reverse engineer it. Who would want to give me money for what reason? How do I qualify? And go find those. So is it based on major? Is it based on talent? Health condition, ethnicity, I don't know. But search, because they come out weekly between now and May. Seniors, okay? So you do it once a week. Search and apply for a couple hours. And you compound that over time and you've applied to a lot, assuming you've applied to the right ones, right? So stick to the ones that, hey, I stand out the most for because of this. Because maybe it's based on my essay topic. Maybe because I do a lot of service hours. Maybe because I'm in ETC. Who knows, right? But Google the heck out of stuff. And then keep a tally, perhaps, in Excel of the ones that you have found so you're not reinventing the wheel every week, right? Say, oh, here's the ones that I'm applying for. And then off you go. But it's on the student to narrow that gap, not mom and dad's checkbook. Question? No. If they win outside money at any point in high school that's not shown on the FAFSA, you would just contact that organization and say, hey, please send that to SLU. And they send a check to them, made out in the kid's name and SLU's name, and it gets deposited into their account. Yeah. Okay? Yes, ma'am. Always. Now, here's the caveat. There's always a caveat. At private schools, usually more selective, but I'll just say private. If you get, there's that SLU grant, right? Because it was based on the EFC. So you got the scholarship and then it had SLU grants, right? So then if you send them, hey, I got $3,000 in this VFW scholarship, chances are they're going to reduce their aid by $3,000. So then it was for naught. So here's what I would do. I would not tell SLU, well, first, ask them their policy. If I win outside money and I bring it to you, do you reduce the amount of institutional aid you're going to give me? If the answer is no, go send the money. If the answer is yes, tell VFW, hey, here's what's going to happen. And they're not going to just give you a check for $3,000 to go buy whatever, shoes. That ain't going to happen, right? They may cut the check to the parents. Doubt it. You can ask them, hey, can you defer that to maybe my sophomore year? Can you go use it to buy a bookstore gift card so then I can go buy my supplies all 4 years that I need? Or other things, because there's always added cost on the college. We do that a lot here. We have that bookstore. They buy a bookstore, gift card and they give it to the kid and say, now you can use it to pay for whatever you want. So there's ways around that. So ask that particular college, are you going to reduce the amount of aid institutionally if I win outside stuff? If no, send it to them. If yes, let's have a conversation. Okay? All right. We've done Q&A throughout, but other things that you are curious about with the whole process, FAFSA, scholarships, what have you. Up top. Let's do the math. So 5,500 plus 6,500 is what? 12? Plus another 14? 15? Right. So that's 27, you're right. So 31 comes from, it must be if they applied for a Parent Plus loan and didn't get it, and then got more unsub that way. That's where that max comes from. So in a traditional sense, yes, max is 27. Yes. Okay. Right, so once the aid amounts come in, now the question is, when do you accept the scholarships? That you can do whenever you get the aid amount. The scholarship you're going to take. You're not going to deny a scholarship. I think the question you want to ask is, when do you have to notify them that I want all that money? That's May 1st. You have until May 1 to commit. So you can look at all those numbers and ponder it for 3 months. Come May 1, you've got to pick your school. Okay? You can cancel before. If they say, hey, here's my aid packages, and now it's March, and I decide, that's fine. But you have up until May 1st to commit. Nope, they cannot pull it away before May 1st. Absolutely not. Nope. Good question. Other questions? Yes. If the kid's doing A+, it is required by the state of Missouri to do FAFSA. Because they want to see, do I qualify for any federal money before I go give you state money? That makes sense. So yes, doing the A+ is required to do FAFSA. Good question. Yes? Housing and orientation and right. No, you can. So with that, now you have to understand, by doing housing typically takes a deposit. So the question is that refundable up until May 1? Most likely, yes. So theoretically, you could be writing check after check after check and lock in the best housing per school and wait to get the aid package, analyze, pick your school, withdraw, and get your money back. You can do that. Or you can lock in the best orientation date. That's fine too. But be careful before submitting deposits, because sometimes they're not refundable. Okay? Especially in an enrollment deposit. That's not ever refundable. You never do that until you know I'm committing to that school. Okay? Good question. Yes? Right. You're not. Right. So the question is there any place around Missouri that I can get in-state tuition? You're not taking in-state tuition with you. They're giving you in-state tuition. Okay? There are plenty of colleges that give you in-state tuition. Murray State, SIU Edwardsville, SIU Carbondale, Western Illinois. These places give you in-state tuition. Or they give you a percentage of the difference in a discount. So like a KU, an Arkansas, as test scores and GPAs stair step up, so does the bigger discount on the difference of in-state and out-of-state. That's your scholarship. So, yeah, good question. Well, I think we've covered. Oh, go for it. No, ask away.
So a lot of the items on this FAFSA form are not viewable on your taxes. So you're on your honor system, you record child support or
Right. Well, no, child support's on your tax return as income. It's not? Okay. Okay.
So my question is that if I was honest on these sort of non-verifiable things, how do I know that everyone else is being honest and what the school was specific to confirm?
All right. You'd be surprised how many are actually honest with the process. And there is a process called verification. So federally, each college is mandated to verify a certain percentage of their applicants and their numbers, meaning verify to me what you said is true by giving me your tax return and W-2s and bank statements and blah, blah, blah. Sometimes it's a random, most times it's a random process. Sometimes there's a flag in what you submitted that tells me, okay, we need to verify this for some reason. Something's not jiving. So you could be randomly pulled for verification. Doesn't mean you're not going to get the money. They're just saying, hey, you got randomly picked. We just got to verify. That's it. They will send a letter. Most likely, yes. So, could you be dishonest? I guess you could. And is the worst thing that's going to happen be pulled for verification? Yes. Could be. But you'd be surprised how many are actually honest in the process. I can see how you'd want to manipulate for the betterment, not you, but others would want to play the game. I can see that, but you'd be surprised how many actually do it, which is also part of the reason why there's that data import tool. So if you're lying to us, you just lied to the federal government too, right? So that helps to verify correct numbers by pulling that data over from IRS. So question up top. Getting in-state tuition's hard. You can. Right. Well, if right. The key is paying taxes in Missouri. That's the key. So if you don't pay taxes in Arizona, no, you're not going to get in-state or be qualifying for Arizona state money, right? And to qualify for in-state, you have to establish a residency in that state and live there for 366 days and get a driver's license and get a job and pay taxes to that state. And then maybe that second year you can be in-state. Well, the problem is if I go to Arizona State or University of Arizona and they have an on-campus residency policy, I have got to live on campus for 1 year, which means in my sophomore year I can move off campus and establish residency and get a job and pay taxes. And now maybe years 3 and 4. It's a lot of hoops to jump through to qualify for in-state. It's tough. It is. So that, and rightfully so, you don't pay taxes in that system. So you can't get the in-state there. Right. But I guarantee you that they have a residency requirement. Right. Right. Nope. Good question. There's another question somewhere here. Yeah.
I just want to clarify between, if there's a difference between subsidized and unsubsidized as far as interest.
No, the interest rate for a sub or unsub is the same. No, unsub is not interest-free. So unsub, the interest accrues while in college. The sub, interest accrues beginning 6 months after college. There's a question over here somewhere. Yes? No. No, but you can do the FAFSA forecaster or the net price calculator. So if you have a junior, you can't go file your FAFSA now. No, you can't. But you can use those tools to get an idea, perhaps, of what they're going to give you. Yes. I applaud you for wanting to get ahead of the game. Yes.
Where does a Parent Plus loan come from?
Parent Plus loan comes from the federal government. So it's packaged through them. Well, I should say that. It's a preferred lender that the college works with, but it's regulated by the government. So the interest rate's twice as high, So very rarely do I ever suggest taking a Parent Plus loan. It's got to be for a unique situation. Yeah. I tell you what, I've already taken up enough of your time, but I will stick around and answer other questions. Thanks for coming. I appreciate it.